Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 22nd of February. Today, the main event will be in the US, where the Fed releases the minutes from its February policy meeting. Considering this was one of the meetings that was not accompanied by a press conference or updated forecasts, we think that the market may look through the minutes for extra details on the Fed's forward guidance and on the timing of the next rate increase. Last week, in her semi-annual testimony before Congress, Chair Yellen was quite optimistic with regards to a near-term hike, indicating that such an action will likely be appropriate at one of the upcoming meetings if employment and inflation evolve in line with the Fed's expectations. Following her appearances, the probability for a March hike rose somewhat, though it has since reverted back to its prior levels. We believe that in case we get another set of optimistic signals from the minutes, that probability could increase once again. Considering that the data the committee had access to at that time were solid, since the disappointing wage growth print for January had yet to be released, we could indeed get some hawkish signals, something that may bring the dollar under renewed buying interest. Our favorite proxy for exploiting further USD gains has now changed from dollar-yen to euro-dollar, which we expect to test once again the 105 territory soon. If the bears prove strong enough to overcome that key support hurdle, then we may experience extensions towards our next support of 10450. The reason behind the change is the increased market attention Eurozone's politics have gained in the last couple of weeks. Overall, we maintain our view that the FOMC is unlikely to rush into a March hike amid lackluster wage growth and heightened uncertainty around fiscal policy. Our model, which is based on the yields of the Fed Fund futures, shows a 28% probability for a March hike, but we see even that number as somewhat optimistic if we take into account that the committee has turned more dovish this year through the rotation of voting rights. Therefore, we still expect the next rate hike to come in June. We would like to see some clarity around fiscal reform, some acceleration in wage growth, as well as an uptick in the core PCE price index before we reconsider this view. As for the rest of today's highlights, during the European Day, we get Germany's IFO survey for February. The forecast is for both the expectations and the current conditions indices to have declined marginally, which is also supported by the slides in both the ZEW indices. Something like that could hurt the common currency somewhat. However, following the surprising surge in Eurozone's composite PMI for February, we do not expect a modest slide in the IFO indices to be particularly worrisome for ECB policymakers. In the UK, the second estimate of Q4 GDP is due out. The first estimate showed that economic growth held steady at 0.6% on a quarterly basis, beating the consensus for a slight slowdown. With regards to the second revision, the forecast is for GDP growth to remain unchanged. We see the risks surrounding that forecast as skewed to the upside, given that industrial production for December, which was released after the first estimate of GDP, beat expectations significantly. Thus, we think that if there is any revision, it is likely to be upwards, something that could extend sterling's gains from yesterday. As for the US economic data, we get existing home sales for January, though market focus is likely to be on the FOMC minutes. In Canada, retail sales for December are forecast to have stagnated from the previous month, something that may hurt the loonie somewhat. For more information, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.